Welcome to The Explainer. I'm your guide through the architecture of the future financial system. If you just glance at the digital asset market during the week of June 11th, 2026, you're going to see panic, just red all across the timeline. But if you look a little closer, right beneath that surface-level anxiety, you're actually witnessing a defining infrastructure test for the global digital asset market. We are literally watching a royal financial empire being built in public. This is the manifesto we operate by. Most people chase hype, we build legacy. Most people follow noise, we build kingdoms, beyond the limit. See, while the retail market is out there treating digital assets like a casino, just chasing the next microcap pump, the true visionary strategists, they're operating with calm authority. They are executing with absolute, unwavering discipline. So, let's dive right into this. The market is currently facing a multi-billion-dollar stress test. We've seen over $5.72 billion in spot Bitcoin ETF outflows since mid-May alone. And yeah, the macro environment feels heavy. But you really have to ask yourself, are you building for the next pump or for the next decade? It's time to shift your mindset away from the panic of those recent ETF redemptions and focus entirely on the reality of the on-chain infrastructure that is being established right now.
Part 1. The Kingdom over the Casino.
Building the foundation of a royal financial dynasty requires the KINGFINITY standard. While everyone else is panicking over hourly price charts, we are carefully interpreting the architecture of the future financial system. We're examining how capital is actually being stored, secured, and deployed by the strongest hands in the entire market.
There's a really stark contrast playing out today. On one side, you have the market noise. That's the intense price stress, the massive $5.72 billion ETF outflows, and the chaotic and frankly exhausting meme coin casino. We've all seen the recent bounty controversies over on Pump Fund, where attention incentives literally led to real-world harm. That's the noise. On the other side, though, is the empire reality. This is the serious, quiet, institutional build-out of bank-grade infrastructure, advanced tokenization, and AI capital execution.
And look what happens when that noise infects the infrastructure. The results are catastrophic. The recent $8.45 billion deposit run on Aave, which was triggered by a bridge exploit, and the security failure over at Humanity Protocol, well, they prove a very uncomfortable truth. Trust is not a marketing slogan, guys. It's an operational discipline. A true financial empire requires bulletproof risk architecture. Weak key management will shatter your kingdom overnight.
Part 2. Stablecoins. Power the realm. Now, this is institutional validation at the absolute highest level. Japan's megabanks, we're talking MUFG, Mizuho, and SMBC, are officially moving forward with plans to launch live commercial transactions. And they're doing this using a jointly issued stablecoin under a very strict trust structure. Let's be clear, this isn't some pilot program for a crypto exchange. This is bank-grade settlement entering the global boardroom. The megabanks are taking the rails and they're making them their own. To really put the scale of this transition into perspective, just think about the number $75.5 billion. That is the current circulation of Circle's USDC. But pair that massive number with Visa's recent moves. Visa is now processing roughly a $7 billion annualized settlement run rate utilizing stablecoins. They're connecting AI agents, tokenized deposits, and stablecoins all together. This right here is the new global liquidity base.
Part 3. Tokenizing the Financial Empire.
The innovation in this space is just moving incredibly fast. Bybit just launched their IPO Express, featuring SpaceX X stocks. Conceptually, this is a massive leap forward. It takes the exclusivity of private institutional deals and brings it directly to retail access via on-chain tokenized securities. On the surface, it sounds like the ultimate leveling of the playing field, doesn't it? And this is absolutely crucial. True visionary power requires looking past the headline, because when you buy those X stocks, you have no direct stock ownership, you get no voting rights, you receive zero dividends. Oh, and if you happen to be in the European Economic Area, you're excluded entirely. Clarity here is mandatory. You have to understand the explicit limitations and rights of these tokenized assets, rather than just blindly following the hype.
Part 4. AI and Autonomous Wealth.
So, institutional capital is moving aggressively on-chain. And guess what? AI is stepping in to act as the underwriter. Take Figure's $717 million acquisition of Kiavi. This is a big deal. It's not just about buying a company. It's about bringing over $7 billion in expected annual real loan origination flow directly into blockchain-native markets and using AI tools to streamline the onboarding. Real-world assets are literally fueling the future of finance.
And the smart capital is absolutely backing this vision up. Morpho Association just closed a massive $175 million funding round, co-led by top-tier institutions. This is concrete proof that decentralized credit markets aren't just some fleeting experiment. They're being aggressively built out for long-term, institutional scale. The credit market is officially moving on-chain.
Okay, so how does this actually translate into actionable wealth for you? Well, look at MetaMask. They've just launched an agent wallet, and here's the flow. First, you establish self-custody. Second, the wallet enforces incredibly strict threat scanning and user-defined spending limits. And third, your AI agent is finally allowed to execute automated on-chain transactions, but strictly within those guardrails. Autonomous finance without guardrails is just chaos. But with them, it becomes your personal, highly tuned financial infrastructure.
Part 5. Bitcoin Treasury Stress Test.
Look, the ETF outflows lately, they've been severe. We're talking about a multi-billion-dollar redemption streak. But this is where you have to maintain your calm authority. This is simply a stress test of weak hands, not a structural failure of the underlying asset. The capital that's leaving the ETFs is just reacting to the noise. The visionaries, on the other hand, are watching closely to see how the true digital asset treasuries react.
Because the corporate playbook is completely evolving. In a pure bull market, the focus is really just on headline Bitcoin accumulation. But in an empire reality, the strategy goes much deeper. Sure, MicroStrategy recently purchased another 1,550 BTC to bring their total to 845,256. But honestly, the real flex isn't the buy itself. It's the fact that they're operating with a $1 billion cash buffer to manage their preferred obligations without having to dilute their capital structure. True treasury discipline is judged by cash reserves and transparency, not just the accumulation headline.
Now, some people might look at the new CME Bitcoin volatility futures and call them boring. Well, we call it being built different. By finally allowing institutions to professionally price and trade expected turbulence rather than just blindly guessing the direction, Bitcoin's market structure is rapidly maturing. It's becoming the absolute bedrock of a sophisticated, regulated financial system. Part 6. Building beyond the limit. So I want to leave you with a bit of a provocative challenge. Who survives when the market inevitably turns? Are you designing your financial resilience today, well before the next crisis hits? Or are you just out there reacting to the noise on the timeline? The tools are right in front of us. Bank-grade stablecoins, tokenized access, AI execution, disciplined treasury frameworks. It's entirely up to you to actually use them.
Stay disciplined, stay entirely focused on the infrastructure, and continue building your financial dynasty. This has been your explainer, KINGFINITY, KFX, Beyond the Limit.